What credit score is needed to buy a house? Are you ready to buy a house, but you're confused as to what credit score you need and on what report you need it on? Yeah, it can be pretty confusing, but I'm going to tell you exactly how to navigate this so you get approved without any hassles. Let's go.
Noel. Yeah, she can fix that. You gotta get it done, no, you need to do it better. Well, she can fix that. Yeah, she can fix that. Investment to get back, trying to get a big stack. She can fix that. Let's fix that.
When you are looking to buy a home, usually we go through a mortgage process. And the mortgage process can be very daunting for most people. Getting a home loan, a mortgage loan, is a big deal for most people, and it's usually the biggest purchase that most people make. Luckily for you, I've done it hundreds of times, and I can tell you exactly what to do and what not to do. So when you are looking to buy a home and you go through the mortgage process, they are looking to see if you have the ability to repay the loan. They're going to not only look at the house that you're buying and make sure that the value is there, they're really going to check you out. They're going to want to know where you work, how long you've worked there, how much money you make. Do you get any overtime, any income? Are there any increases in your or decreases in your pay? Were there any gaps in your employment? How is your stability? You know, things like that. They really are digging in to see if you have the ability to repay the loan. They're going to dig into your bank account, into your savings patterns. They're going to see bank statements and 401k statements and retirement accounts and any type of money that you have. They're going to ask to see every single statement, and they are going to review those statements line by line. So you want to be really clear that this is what they are checking for. They want to make sure you have employment, income, and assets to meet the loan. And this is important to know because you can now show them and present to them the best package possible so that you get approved. Let's talk about that. So when you go to get a mortgage loan, usually you'll go to a bank. You'll go to, where you have your checking account usually is where you'll apply. All of the major banks offer mortgages, credit unions, and things like that. But then there's also companies called mortgage brokerages. Those are brokers. Those are people that have access to lots of lenders and can submit loans on your behalf. They literally are able to shop your loan to multiple different places to see who will give you the best rates and terms. You usually want to use a mortgage broker if you have a situation with your credit because that will allow you different options. You will have to pay your mortgage broker a fee when you close on that loan, and that's kind of one of the reasons why people don't use a mortgage broker. So there's pros and cons. If you have a situation where you need a mortgage broker and you need your loan shopped around, it's an absolutely amazing thing and it's worth the money. However, if you have decent credit, you're very stable, you haven't moved very much, you have 2 years employment, salaried, then you probably could be able to go right into your bank and get a mortgage loan and go through that process really simply. So first of all, let me know what your situation is. You can even comment below. I read all the comments and I can even answer your questions and help you decide which one you should go with. The next very important thing that you need to know when you are applying for a mortgage loan or trying to get approved for a home loan is the difference between the different credit reports and your credit scores. So as many of you guys know, you have a personal credit report. There's 3 credit bureaus. There's Equifax, TransUnion, and Experian. And all 3 of those credit bureaus will give you a score. And this is what the lender, the mortgage lender, is going to be looking at when deciding if you qualify for a loan. They're going to look at all 3 of those credit reports for a mortgage loan. They're not going to just look at one. They're going to look at all 3 of them, and they're going to use the score that is in the middle. If for some reason you're not getting a score on all 3 of your credit bureaus and you're only getting maybe 2 scores, for example, then they're going to use the lower of those 2 scores. If you have 3 credit scores, as you should, they'll use the middle score. If, for example, you have no credit scores at all, that is a different situation, and you are going to probably not be able to get approved for a mortgage loan at all because they're going to want you to have a credit score or build what we call non-traditional credit in order for you to get approved. That's a whole nother situation. Hopefully you have a credit score. If you have no credit score at all, it's going to be very difficult for you to get a mortgage loan at this time. So let me tell you some things that you can do to make sure that you get approved. So for most mortgage loans in the traditional world, they have different types of loans. They have conventional loans and they have government loans. Conventional loans are your Fannie Mae and your Freddie Mac backed loans. Those are the loans that most people in America get. We also have government loans such as FHA loans, VA loans, USDA loans that are backed by the government. Now, for all of those loans, Fannie, Freddie, government, you will still go to your lender. You don't go directly to Fannie Mae, or you don't apply directly with the Federal Housing Authority for a mortgage. You will still go to one of those two things that I told you, a bank or a mortgage broker. However, I want you to be educated and know that these two types of loans exist. You have conventional loans, you have government loans, and then there's a third category of loans for people with difficult credit, and we call those loans subprime loans or non-QM loans, non-qualified mortgages. And those loans are going to have a different criteria. I'm not going to necessarily get into that because those guidelines change all the time. But when we're talking about a traditional loan that most people get, I'm talking about either a conventional loan or a government loan. And for all of those loans, you're going to need, for a government loan, you can have lower credit scores. You can have credit scores as low as 620 or 640. For some of your conventional loans, you're going to need credit scores 680 and above. So just kind of giving you that information. But I'm going to give you a bonus on how I was able to get over 40 properties without ever having to go to any mortgage lenders, any banks, or anything like that. And I'm going to share that secret with you. So as many of you guys know, I started off investing in real estate from my parents' basement. I was broke, I had bad credit, I had multiple foreclosures, I was a total loser. But what I learned from my parents' basement once I got a real estate coach was he taught me about wholesaling. And more importantly, he told me how to find people that were having property problems and how to get those properties from those people without them going into foreclosure or just giving the loans back to the bank. And I made a ton of money and got a ton of rental properties in the process. You simply can go ahead and start marketing and putting out ads, signs, letters to people that are behind on their mortgage payments, just using that as an example. And many of the times you can actually get one of those properties for the past due amount on the mortgage. I literally have been able to acquire properties for just a few $1,000s by targeting someone that was 3 or 4 months behind on their mortgage payments, catching those payments up. That person moved out, sold me the house, and then I just took over those mortgage payments. Boom. I never had to apply, never had to have my credit pulled, never had to go to any banks or any lenders. I just had to have the money to take over their mortgage payments. This is a system that we call TOPS. Taking over payment system is completely legal, and it will allow you to buy properties subject to, meaning subject to the existing financing staying in place. It's absolutely game changing, and that is how I acquired so many properties for just a little bit of money. And you can do the exact same thing too. So there you have it. You have a full lesson on what credit score you need to get for a home loan, but even better, you have a new idea on how you can start getting properties without your credit at all. In fact, I've created a complete training that teaches you all of it. You can go to noelsfreetraining.com and you can watch this entire training. It's a little bit too long for me to put up here. It's about an hour, but it will teach you everything. It's a full class. Go ahead and check that out. I want to make sure that you have all of the resources, all of the tools, and all of the knowledge that you need to be successful. This is Noelle, to your success.